Today we are discussing Peterson International's multi-life guaranteed standard issue concept, and it's been a huge success in the last few years actually, and just really expanding in popularity, especially in the last year. It's about tripled its size for our sector of business. I know it can do the very same for yours, and we're going to get into many details about how we can go about that. Again, I'm Robert Clark with Peterson International Underwriters. You'll see our phone number, our website there on the main screen. My email is also just below that. I'm going to have the email address displayed in the bottom right corner of each slide. So we will not have a question and answer following this webinar. First off, I think it's going to be a little bit of a longer one, about at least 30 minutes, about 25 to 30 minutes. So in an effort to get everyone on their way, we will not be doing the Q&A. We have a number of attendees as well. And feel free to send me those questions by email. Call our office. We have a number of people eagerly waiting to hear from you. And again, we're happy to discuss those one-on-one, so want to give you that personal attention. What we'll be starting off with today, again, since we have such a broad audience, we do want to cater to everyone's needs as much as possible. So we're going to go over a little bit about DI, about kind of the importance with protecting your income. Again, that's going to be a very brief touch, since I know many of you are well aware of the purpose, and then we'll be getting right into the guaranteed standard issue and how it addresses that importance of income protection. So again, without further ado, let's go ahead and get started. I think we have a number of people on the line here, and if anyone has any questions or anything like that, I will be paying attention to the chat, so just throw up your questions or comments there. So what is DI? DI is income protection. Defined, it's a replacement of a majority of one's income in the event that that insured is disabled due to an accident or illness. Why is this important? Because the U.S. Bureau of Labor Statistics states that at least 78% of one's income is spent on a monthly and annual basis. Okay, this is an average based on the U.S. Census, ranging from any low to all the high incomes. Okay, so 78% of income is spent on an annual basis, regardless of the individual's earnings. The importance of disability protection here is because harming that income by becoming disabled is a great risk. 90% of disabilities are due to illness, and only 10% accident related. So for all those who say it'll never be me, it's very hard to prevent some of the certain illnesses that are playing a factor today. Additionally, 1 in 4 individuals will become disabled for at least that 90-day period by the time they are retired. So it's a proven fact, with those disabilities lasting an average of 2.5 years. And disabled Americans make up what looks to be a small portion of the U.S. population at 12%, but that red pie represents 37 million individuals currently disabled and growing every day. If we were to put this in a diagram and try and explain it in the easiest way possible, each person has their line of expenses, right? Sometimes varying, but for the most part, their expenses come in at what they can pre-estimate on a budget basis, and then they have their income. And hopefully it's set up like this to where there is a gap between your income and expenses. Again, this is based off the U.S. average. So anything between those two items is going to be your savings. And life's fine and dandy, everything's going great. Maybe you'd like to save more, maybe you'd like to make more. This is how life's going, and it's a great thing if it looks just like this. But what happens at the point of a disability? First, your expenses are going to skyrocket. The medical bills, the co-payments, the driving to and from doctor's appointments on a daily basis, that takes over the expenditures of your income. And not only that, your income is no longer existent. So since you're disabled, you're unable to work. Those vacation days, that short-term disability, it's only going to last so long before your income takes a drastic hit. Many people, obviously, here's the deficit there. You can see that big red area. And so many people say, well, I have medical insurance. This is going to help with the bills. I'll be able to continue on with my life and at least get by with the fact that I have health insurance. Well, health insurance only solves half the problem, right? It's going to limit those expenditures, but still you don't have that income coming in. And you can see that deficit still exists. Although not as big, it's still there. And anything in a red or negative number at the end of the month, it's only a matter of time before that's changing your lifestyle or flipping it upside down. So how do we solve this issue? Disability insurance. Again, disability insurance is going to provide a majority of that income upon this key area. On the high chance that you become disabled, the disability insurance will support a majority of that income. Make sure you're not depleting from your 401k, you're not depleting from the kids' college fund or wedding fund, and it's going to leave your lifestyle in place should anything occur. So how does this apply on a scale of our average and high income earners? You can see, the lower incomes of 50,000, maybe 100,000, those individuals are, for the most part, going to be sufficiently insured when it comes to their income, whether through a group long-term policy or supplemented by an individual policy. Again, for the most part, those individuals can reach that 65% of income replacement. But you see, once we hit the 150 scale, that percentage of income replacement starts to have an extreme curve, and it continues to decrease as we go into these higher incomes. Again, with an average, the average person spending 78% of their monthly and annual income. It doesn't matter whether you make 50,000 or 1 million. You need at least that 65% income protection in place in order to survive. If you don't, you face this big red area. And how's this look on your cash flow chart? So sure, you have medical insurance still saving some of those monthly expenses, but your disability insurance at 50% replacement, you still have that red deficit. This is not a equation for success. It's going to leave you in just as poor of a situation as not having any income protection. Whether that takes you 3 months or extends out to a year, it's not a pretty situation. And again, it's very important that we protect these individuals' incomes. To maybe look at a more formal graph, here's how it's normally seen. So again, if you can see the incomes, we're ranging from 500,000 up to 2 million here. Many have a group LTD policy in force, which might add, as most of us know, is a taxable benefit more often than not, so still not replacing the entire stated benefit. So what they're going to do to supplement this on top of the group LTD is you provide the individual policies. Now, whether this is issued on a group basis or if these individuals have obtained supplemental plans is regardless. But you can still see it has the same curve, and we're not getting to the 60 or 65% that an individual needs to be sufficiently insured. So this is when you turn to Peterson. You offer a Lloyd's plan that's going to be able to fulfill those necessary benefits to get any income client to the appropriate level of insurance, which is that 65%. So why would a high income earning individual not go through the effort of obtaining this proper level of insurance? Well, as most of us know, the individual requirements for a disability insurance policy are just almost astronomical. When you do it time and time again, you start to get the flow in the process. But when a client walks into obtaining disability insurance, it's anything but a pleasing process. So it's going to require a at least 4-page application, many times more. Medical underwriting, which is looking over their medical exams, either paramed, blood, urine, sometimes more, an EKG. And from there, from that underwriting, they may even have exclusions for things that have already started to become an issue, even though they haven't been disabled previously. So again, not an ideal situation, and it's no wonder that some of these clients do not or put little to no effort in focusing on this important aspect of their lives. So again, this is going to relate to some of the most common disability insurance rebuttals. It's too expensive, there's way too much paperwork, too many questions, and I absolutely hate exams. All of this it's way too much time, and that is something I don't have any of. Or you get the corporate executive saying, you know what, it's included in our benefits plans. I know I have disability insurance. I've heard our human resources director say it before, so obviously we're perfectly protected. Well, once you're able to get a copy of those benefits from them and completely examine it and find out that they're hitting a certain cap, you can reply with, well, sir, your benefits are actually limited to about 30% of your $500,000 income. So how can you afford to live on less than $150,000 per year? Now, what may be sufficient to most of us with that $150,000 salary, again, to someone earning $500,000 a year, do you think they're saving 70% of their income on a monthly or annual basis? I would think not. I hope that you would understand that most likely not. If they are, congratulations, but again, if not, they need income protection and the appropriate level, more importantly. So what is GSI? An abbreviation for Guaranteed Standard Issue. GSI takes a minimum group of at least 5 lives, and what we can do when we have those 5 lives in place and needing a certain coverage is we can offer coverage with no exams, absolutely no underwriting. Not only that, a discounted premium, extremely quick issuance of a policy, and that policy is also portable on an individual basis. So if you get someone splitting away from the group, it's not like a group LTD. They can take that policy with them, maybe to their next employer, and you may even still be their agent at that point in another group. It's a very versatile policy. It's a very comprehensive policy, and so a valuable one at that. So why GSI? Well, we look at these common DI rebuttals, and it's going to answer all of our questions. So too expensive? How about a premium discount? Too much paperwork? How about only one signed page for your entire group? Too many questions? Absolutely no questions, and absolutely no exams, right? So your too much time comment, policy is issued in less than a week. It takes even less time to get their personal information and have that enrollment form signed. So too much time is no longer an excuse. I guarantee you, after you answer all 5 of these rebuttals that are going to come out of your client's mouth, you'll have them dancing like whoever these fellows are. Okay, again, features of the multi-life. So today we're kind of discussing the personal side of a multi-life plan and how a personal GSI plan can benefit a group level of benefits. It's going to offer a 5-year policy term. All policies that we offer are an own occupation definition. It includes a monthly and optional lump sum benefits, so we can really cater to any income or any level of protection that they're needing. And it includes a 312 pre-X. Now there's various options available with this, as it's shown here on the screen. Essentially, a 312 pre-X takes 3 months prior to the inception of the policy, and any treatment received within that window would be excluded for the first 12 months. This, after those 12 months, everything is covered as normal. And one of the even greater benefits is on the renewal of this multi-life GSI. It's considering the same pre-X period. So it's looking at the 3 months prior to the original policy. So no current treatment, no new treatment, no current 3-month look back. Again, if they were fully covered going into it, they're going to be fully covered again and not look at any recent treatment as long as they weren't disabled. An automatic benefit increase is always included with every multi-life policy, as well as the option to add residual and cost of living adjustment riders. It's very important to think of the multi-life platform as a chassis and not a product. Okay, this is, again, what we're talking about today is a personal level of protection, but the multi-life program can be dispersed across many of the coverage types offered by Peterson or by a disability carrier. And so it's very important to understand that we can take this chassis and combine it with different products that we offer to make this available in multiple situations. So how do you approach different benefit options? One, you're going to look at the number of individuals that you're working with, maybe at this particular firm, as well as the variance of incomes. Between these two factors, it's going to allow you 3 options: a mandatory plan, a voluntary plan, or a hybrid plan. Oh, let me go back here. Well, we can just get started. So the mandatory plan, again, this is the first option, is going to be ideal for maybe a smaller group, lower amount of lives available to insure, because you find that once you get into the 20 to 50 groups, offering a mandatory level of coverage, you have to have 100% participation, which is very often very difficult to do. And so again, when you have 5, maybe 10 individuals or up to 15, the mandatory is an ideal option. And even more importantly, it's really when the employer is behind the plan. So if you sell it to that HR director and the CEO, and they are completely emphatic about offering this increased benefit to their executives, not only from a benefit standpoint, but because of the importance of the coverage, then oftentimes they'll make it mandatory with their employees, and you can offer the mandatory chassis. What's greatest about this is it offers the largest discounts, so that is a huge benefit there. And the only thing needed to initiate the plan is that green form that you see on the right there, the multi-life declaration form. That's completed by a representative of the company, not even your client, so very easy to put through that, and that is literally the only document that we need. Looking at a voluntary basis enrollment, okay, so we're starting at now 10 lives and above, and you can see kind of on the chart there how that disperses. But essentially, we are going to be able to offer up to 6 different variations on a voluntary GSI chassis. So what I mean by that is maybe you can see here on the multi-life enrollment form, that blue form on your on the slide. So we're offering three different benefits that offer monthly benefits, and then 3 additional benefits that offer monthly and a lump sum combo. So again, 6 different combinations to offer the client. Anyone can participate on any level they want, as long as we have these participation requirements met. Another thing, if you have over 20 individuals, we only require 25% participation. This is a newly approved offering that we're able to do, and essentially if you had 20 and 25%, that's only a 4-person multi-life, and we're seeing more and more of those each day, and usually very successful at getting those approved. So something to always consider, as well as the increased discounts at that level. We've also been able to develop a online offering. So say we have a large group of 50 or 100, we offer a online login. Basically, the person is going to put in their last name, which in this case is test 2, and the last 4 of his social is 1, 2, 3, 4. You must have a lot of break-ins. This is all customized. It's not going to have the handicap logo. It's all customized with your agency or benefits information, your phone number, or it could be your smiling face. This is really custom to you specifically. And again, your client's just going to log in here, and it's going to display those same options that we viewed on that sheet. So current age, the deadline that the individual must enroll, which is the end of this year, and the policy's effective date starting 1/1. It's going to offer a maximum, a 3/4, and a 1/2 maximum option. So they have a few different premium ranges to look at, as well as I talked about earlier, that lump sum combination. So your client can pick any level of coverage they want, and it's as easy as defining it. Maybe they want 75% of their max, just under $500 a month. Sounds like extremely valuable coverage. Let me just type in my name here, confirm, and just like that, it's sent to our underwriters. Your individual policy is being set up, and we're going to work through to get that initiated. So a very simple process. Again, we've catered on that online division, something very helpful. Oh boy, time is scooting along here, so I'm going to get a move on it. The hybrid option is going to combine both of those mandatory and voluntary options. So very ideal for when we have over 10 individuals who are willing to do a base layer benefit. And so let's just say that you have exactly that number on 10. They're getting at least $10,000 a month in benefits. If you have 1 or 2 individuals making an extremely high income in that group, you can offer a voluntary excess plan, and there's no participation requirements for that voluntary offering. So a huge benefit when you have a situation like this where maybe there's a huge variance in incomes and only 1 to 3 are making that higher income. So you get a mandatory base layer in force, and then you offer an additional voluntary. This is what we call the hybrid plan. And again, the huge key there is the minimal participation on that voluntary benefit. Who are the ideal clients for this GSI? Obviously, for the excess coverage is going to be income earners over $150,000 per year. Most often, the groups that we see utilizing the GSI plan are attorney law firms, physician and surgeon groups, C-suite executives, and as well as pilots. Believe it or not, we have a loss of license option for the GSI. Again, maybe you work with a human resources director. If you're a benefits agency, you're already working with these individuals. You have a huge advantage because you already have many of the employees' information from alternate coverages. So you can see what their DI benefits are there. You don't have to try and get into too much of that personal information beyond what you already know. And again, this is going to be your ideal client group to utilize the Peterson Multi-Life program. And how do you identify the clients? Maybe they are high income earners. The main thing here is to just make sure that they have a base disability plan in force, whether that's group LTD, whether it's an individual policy. We just need to have a base layer. The GSI can be a second layer coverage. It could be a sixth layer coverage. It doesn't matter there as long as there's one coverage, at least doing that first dollar protection. And then also making sure that they're not already 65% insured, which again for high income earners is very rare to come across. So most likely not, but again, just something to make sure of. What information do you need from these clients? Again, this is where being a benefits agent, you have a huge advantage because you already have a lot of this information. All we require is a census, including their age or date of birth, their income, their current DI benefits in force, and if possible, their specific occupation, just so we can honor that ONOC definition. And we do have an Excel template of this required census available. So if you'd like us to email that out to you, and again, just shoot me an email at that robert@piu.org, and we're happy to get it to you promptly. We're going to run through an example here. I think that'll make the most educational sense if you can see how it applies and how it benefits certain client. So let's just imagine that your client is Bill Smith, who's age 45 and he makes $750,000 a year. He's a part of this team of executives. You can see the pay scale here at how many individuals are making what income. Again, he's kind of in the middle there, middle age bracket, and they all have this $20,000 currently in force. So if we're to offer this on a mandatory basis, and again, this is going to be a little bit harder. We have 20 people here. We have to have everyone participating on the same level. So the same level of benefits here would be 75% to $250,000. Quick disclaimer, the reason we're using 75% here instead of 65 is we're assuming that group LTD is taxable, because it is more often than not. And when that's the case, if your individual has any taxable benefits, then we can actually increase our participation to 75%, which is a huge advantage. So say we have this benefit in force, you can see how it's creating everyone, giving everyone that equal line of coverage and offering 75% income replacement above that group LTD and IDI programs. If we look at a voluntary offering, again, we have 20 individuals here, and I split up these graphs, so I hope it's not too draining to look at. But again, we have 20 individuals. It's only going to require 25% participation. All the green here is the PIU voluntary plan. So anyone who's willing to participate, it's going to bring them to that 75% income replacement. So the hybrid is going to bring that mandatory and that voluntary together to give many different levels of income replacement. So let's just say the mandatory was 65% replacement up to $25,000 a month. And then we did a voluntary offering on top of that, which goes to 75%, replacing no more than $100,000 per month. So you can see the requirement for that voluntary option, although it would be zero, really, only one person could participate and still be able to utilize that extra benefit. But they're able to also custom cater to that level of protection that they're seeking. And so here, this red little X here is your client, Mr. Bill Smith. And of course, he's going all the way because you've sold him the idea of income protection and how important that benefit is. If we're looking at, let's kind of expand on Bill Smith's scenario. So how exactly did you help your client besides getting them that income replacement? Again, $750 income. The benefits was a 90-day elimination period, a 10-year benefit period. The monthly benefit was $26,875 per month, which means the aggregate benefit was $3,225,000. Always important to calculate this number out, and it really shows what you're providing to the client. The individual policy premium would have been $7,799 for the year, equaling $21.37 per day. And now don't quote me on these numbers. You can't say I actually have a Bill Smith in that exact scenario and this is what I expect to pay. These are rough estimates. But if we took that to the GSI program, the premium, the annual premium, reduces to $54.18 for the year, cutting it by just over 30%. And that also does the same, obviously, to the per day. And look at how drastic that dollar per day of coverage changes, and how beneficial that can be to provide that to your client and say, you know what, this income protection is extremely important. It's only going to cost you $21.37 per day for that over $3 million of protection. But Bill, what if I can get you that coverage for under $15 per day? And the GSI is exactly how to do that, as well as waiving all those medical exams and questions and that the hassle of that individual process. Another great feature that actually benefits you as the agent for our GSI offering is the commission. So there's no graded commission. There's no reduction in commission for how great of a policy you sell. The individual would have been $11.69. The GSI premium, say we had 15 people go all the way. Instead of that $1,000 commission check, you're getting a commission for $12,190. Again, that same level of commission regardless of the amount of premium the case is. So just like you see on this little chart here, this grading scale is non-existent for PIU. Another great benefit to reward you for getting them to that GSI platform. The process to initiate the plan, again, multi-life for a mandatory is the green form. Voluntary would be the blue form, or we can go ahead and issue these electronic links for your clients. To add or delete people, it's as simple as a written request to do so. We'll see what the premium is there. The employer goes through with getting that deducted as soon as as the new employee is eligible. And again, if they're deleted, that policy is portable and can be transferred to an individual policy. So very easy process there from an administration perspective. And last slide, I promise. I thank you guys for being so patient. These are all the policies or coverage types that we can offer using this guaranteed issue platform. So with that personal, that high limit personal, that's pretty much just what we went over. The loss of license designed for pilots, airline corporations. On the business end, if you have a five-person key person, or a buy, sell, buy out with maybe 8 or 10 doctors, the options are endless, and there you'll see all the business coverages that we can offer a multi-life, no medical exams, no financial underwriting, and as little as 1 week issuance. It's very helpful to your client, and also makes your life much easier too. So certainly a coverage type worth utilizing. I hope you were able to learn a great deal of information here, and I hope it sprung a great deal of questions. So if you do have any questions, do not hesitate to email me directly. I'll be at my desk in 5 minutes. So you can call or email, whatever. I'm happy to give you that personal attention. Like I said, we have the multi-life experts in here, in-house, all day until 4 p.m. Pacific time. So give us a call. We'd love to hear from you. And again, thank you so much for being so patient. And I know it went a little bit longer, but we are done. So thank you very much. Hope you enjoy the rest of your day. Have a very happy holiday, and we will be continuing our monthly webinars in very early in 2015. So make sure you keep posted and stay on track for the next one coming up. Thank you all very much. Have a great day.